Good afternoon, everyone. Thank you for joining us today. My name is Fedonas Ioannou, and I am a senior associate at REVERA Cyprus. For those who are joining us for the first time, a few words about REVERA Law Group, which is an international legal and tax advisory group based in various countries across multiple jurisdictions, including Cyprus, Poland, Georgia, Kazakhstan, Armenia, and other CYS and EU markets. We operate as a cross-border team of lawyers and tax professionals supporting tech companies, investment groups, family offices, and also international entrepreneurs. Our Cyprus office also focuses heavily on corporate structuring, reorganizations, international tax planning, IP, and tech-driven in general business models, and also cross-border transactions and regulatory matters. Today's webinar is part of a broader discussion that has been taking place in the market regarding the very well-known Cyprus tax reform that became effective as of this January. Many of you may already have attended presentations from other professionals or read any commentary about this topic. Our goal today is not simply to repeat headlines, but apply practical knowledge in this matter. Generally, we are aiming to clearly explain what is actually changing, clarify what becomes effective as of 1st January 2026, and also highlight practical implications for companies as well as individuals. Lastly, we'll focus on areas that require planning. At this point, allow me to confirm to you that this session is being recorded, and the recording, along with the presentation material, will be sent to the emails you have provided in the registration form. Therefore, you will be able to revisit the content of our presentation or share it with your colleagues. If you have any questions during the presentation, please submit them in the comment section under the live stream. We will collect these questions and address as many as possible at the end of the session. Now I will hand over to our tax partner, a certified public accountant with 28 years experience in tax and audit, Mr. Sava, who will walk you through the tax reform in detail and explain the technical as well as practical aspects of these changes. Savas, the floor is yours.
Good afternoon, Fedonas. Good afternoon to all. First of all, we have to consider that this is a new tax bill since 2002. It happens 24 years after, and with the major changes. And I will go through these changes as many as possible. First of all, the change it has to do with the increase of the corporation tax for 12.5 to 50% for the profits of corporation of the companies after 1st of January 2026. So our government, our tax office will start collecting the 50%, which is 2.5% more since the year 2026. In the same time, there is another major change, the reduction on the dividend tax, which from 17% will reduce to 5%. This reduction will be affected for the profits of the year 2026 and so on. So our tax office will be collecting the 70% tax as it was before up to the year 2025. I say these two things and emphasize that the budget of our tax office will not be affected since the year 2027, and the change of the presidency in the year 2028, actually this tax bill will affect the budget of our government after the year 2028. I believe let's start with the major changes that affect our clients, and please, you can ask me through the Telegram or through the chat anytime you like. As I said before, the rate on the corporation income tax will increase from 12.5 to 50%. That for all the Cyprus companies as they are taxed in Cyprus. The tax losses that you can carry forward for 5 years will be 7 years. There is exception here for the tax loss of 2019 that you cannot carry it in the 2026, but you can carry it on the 2027 because this is how it comes for 5 to 7 years. The stamp duty law abolished is no stamp duty anymore, so we don't need to stick any stamps to any contract. We have, this is positive, at the same time is negative, as for some government works, we have major problems. For example, apostille now is done by a bank transfer. It should be done one transfer per apostille. So if I go as an office with 40 apostilles, I need to show them 40 bank transfers or €5 each. Another issue that it was clarified, which is positive, it's if a Cyprus company, it's a Cyprus tax resident by the formation. This is clarified. Now, if for any reason the Cyprus company will not declare itself and show to our tax office that is a tax resident of another jurisdiction, then by default it becomes a tax resident of Cyprus. Another major changes is for ex gratia payments, that for any retirements, any payments from employers to employees, or any golden parachutes, and it's over 200,000, it can be a fixed rate of 20%. The redemption of unit funds up to the year 1st of January 2023, the amounts will be as is now taxed, and for that on, it will be taxed as dividends. There is an additional R&D deduction of 20% super tax deduction for scientific research and R&D expenses up to the year 2030, which means you will see and further down that it cannot be used in combined with the IP box. The intangible asset amortization, it can go up to 20 years. As for individuals, we have a new tax brackets, and the most major one for 19.5, the tax free amount went to 22,000. No defense payments on rental income, but all rental payments must be done with a bank transfer, even there is a criminal actions against people that they receive the rent in cash or any other form. We are back to tax deductions for individuals related to children, to life insurance, to loans, etc. There is a whole issue about this. I will not go in detail, just what is important about the employer must accept, as it is on the IR 59, the deduction, and it cannot ask for details of how this amount is calculated. It's been reported to us clearly by the tax office on the last seminar we had with them. The tax months for individuals is as follows. As I said, the first 22,000 is free. For 22,000 to 32,000 is 20%, and it goes up to 72,000 over is 35%. You have to understand that in January of every year, we need to fill up all the employees, the IR 59, and will be adjusted to your withholding tax from the employer. The tax benefits of individuals, as you know, if your salary is more than 55,000, is 50%, which still apply. If it's less than 50,000, applies at 20%. The non-dom exception of 17 years, it means that you have additional 2 periods of 5 years each to apply for the non-dom. What it means that if somebody is non-domiciled and based on his certificate there is a year of expiration, he can extend this expiration year by 10 years, and he has to pay per period 250,000. What I said to my clients, because 250,000 one-off at the beginning, it's an important amount. I said to my clients, you have to think, if you will do this 5 years, more than 5 million euro of dividends received, it's worth it. If it's not, you have to rethink how you do it. Please know that by the time you pay the 250,000 for 5 years, there is no refund to you afterwards. The share option scheme, it came to us with the IT companies, and it's about the impact that employee has if he gets this bonus issues to him by the company. What it changed here is that any existence schemes must be reported and approved by 30th of June. So if you need more help on this matter, you can contact us. There is gains tax at 8% flat rate. And okay, if you fail to report it, then it will not exceed the 8%. It will be taxed as a benefit in kind. I will give you an example here. It's a little bit exaggerated, but it's good to understand how it goes. Let's say we have an employee that earns 550,000 per year. The maximum taxable benefit is 1.1, but there is a limitation of 1 million. So in this case, if he receives a benefit of 1.5 million of shares, then the 1 million will be taxed by 8%, and the rest of it will be added as a benefit in kind onto his salary at the month after he received the shares. Okay, they did that in a way to not have large benefits in compared to the employees' salaries. I believe it's fair, and some other people, they will say it's exaggerated, but that's the law what describes. IP. Since we started having clients in the fintech environment, intellectual property, it's very important to see how we behave. What is actually the problem? The problem is any IP amount that you enter as an asset to the company must be amortized. This amount to be amortized is taxable expense. So our tax office, we will need evidence to the IP why you estimate the IP to be 100 or 100,000 or 100 million. So they will need a valuation of the IP. Valuation of the IP, it can be done by anyone professional in this matter. We don't have until now how this valuation it can look like or in what standards of this valuation. But one thing that I can tell you by experience is by the time you value an IP in the value of 100, let's say, and then as the year passed and you see the incomes of this IP, and the incomes of this IP, it can be show on net present value to be 200, then it will be all right. It's okay. It's fine, the 100 to amortize. But if it's 10, then they will not accept the amortization of the IP despite the valuation. This is, I'm repeating myself here about the IP, about how it's been, needs to be calculated and the reason why. And I always tell my clients a strong valuation must be done. And furthermore, it's been, if for any reason the incomes in the future are not based on the valuation or they have material misstatements, a readjustment must be done on the accounts if the client wants, and if this is communication with the auditor too. On the 60-day tax residency, they have a small change that it has not been a tax resident for another country, and it's obvious why. It's a 60-day, so there are tax residents that there are some who apply for the 60-day rule, but they already are 183 days to another country. So they are actually tax residents of this country by definition. So it's been abolished, it's correct. There is a small detail that I need to mention here. It's on the first year, you become a tax resident of Cyprus, even for the 60-day rule or with the 183-day rule, you are becoming a tax resident of Cyprus since 1st of January, because we have a fiscal year here in Cyprus. So any tax paid and any incomes received at that year you're becoming a tax resident of Cyprus must be reported, and you will receive a deduction of the tax based on the payments you done on the other jurisdiction. Crypto taxation. I'm very disappointed personally about this taxation. It's been discussed a lot, and I really don't know what is the position of our tax office. It's been taxed everything. When I mean everything, even gifting crypto to your children, to your brother, mother, it's been taxed. We've been discussing this with the tax office. They still think that it's normal, and we are in favor of any other jurisdictions. We'll see how it goes. So what has been taxed? Selling crypto for fiat. So if you convert the crypto to any currency, then it means that you will be taxed. A change in crypto for another crypto. So if you have BTC and you do Ethereum, you'll be taxed. Use the crypto for purchases. This is the thing that I hate more. It means that if somebody has a credit card that is connected to his crypto account, every time charge this credit card, then there will be a taxable transaction that it needs to be counted. Furthermore, they tell us that that losses offset only crypto gains at the same year, so there will be no transfer of losses. And when it comes to mining, it's a trade or business, so it will be taxed as a company, as an individual, which the rate is 50% as individual on the tax rates. This is a new thing now in our tax system. The deemed benefit of financial transactions, what actually says, if for any indirect or direct shareholder receives loans in any way, then it has to be taxed at 9%. I have here an example about somebody received a 4 million euros loan. his annual benefit is 360,000, which is 9% of the 4 million. Then divide by 12 months. So every month he has to show a benefit in kind 30,000 a year, addition to his salary. There is an extension of the super deduction of the R&D, qualified R&D of 120%, which is, it can be used, but not in combined with the IP box. So if you choose the IP box and to get the 80% deduction on the corporation tax, then you cannot receive the super deduction of 120%. The extension period for 2025 went to 2030, and it relates to any IP companies. As I said before, the tax for dividends was decreased to 5% for 70%. It decreased to 5% for the years 2026 and after. As it concerns up to the 31st of December 2025, any accounting incomes will have to tax and pay at 70%, and will have 2 years to do so. The payment of the rental income SDC is being abolished, as I said before. The deemed dividends distribution is being abolished by 1st of January, which is related again to the 2 year after profits, because some companies, they can have profits in 2 years. For example, in 2023, by the year 2025, they have to issue the dividends, which must be at least 70%. They don't have the accumulated earnings because of losses. Then they have to do the deemed distribution of dividends and pay the 70% tax. In the case of bonus issue shares, the amount capitalized will be treated as dividends. Until now, we have no treatment, and we change this. What this actually says is when you transfer from the dividends from the accumulated profits to the share capital amounts. Disguised dividends. It's a new section to this law too. Until now, when we've been audited by the tax office, and we agree that these expenses, they were not legitimate company's expenses, they were just deducted for the corporation tax. So, or let's say if you have a profit, they add up on the profit and you pay the extra tax. With this regulation, they went a bit further. It will happen what I explained to you, but furthermore, these amounts, you will be taxed at the 10% dividend tax. So actually, you will be not allowed as a taxable expense, that amounts, but at the same time, they will ask a dividends of 10%. The Coming Against Tax Law, it's the major changes they have to do to the brackets that when you sell first-time property from 17,086 to 30,000, for agricultural land from 25,629 to 50,000, and for the primary residence from 85,430 to 150,000. A good example here is if you already took the advantage of the 17,086 and you do a new sale, then you are allowed to take the difference between, and your exception comes to the 30,000. The same with the primary property. The social insurance contributions are those are just reported as to understand what is now for the year 2026. The maximum insurance earnings is 68,904 per year. This for 2026. We have the tax for all that you have to pay the contributions every month. Thank you for listening to me, and hopefully I help you to understand more about this new tax pay.
Thank you, Savas, for the detailed analysis. At this point, we are going to move to the Q&A session. I have seen already that many of you have sent us your questions. Before we move there, as you can see, this reform is not cosmetic at all. It's very substantial in many areas. Therefore, the planning for the business and individual entrepreneurs is very important. After the webinar, we will be happy to discuss in specific the situations privately. So please feel free to reach out to us directly. So we can.
We have some questions. I think we should go.
Yes. No, I'm going directly now to the questions, and I will read out. Mr. Savas will be able to cover them. So the first question relates to how can companies pay, if the companies can pay salaries in cryptocurrency, and if so, which party will be responsible in case the income tax is not paid?
First of all, to pay salaries in any form, it's allowable. The law, it doesn't say that salary should be paid in euro, for example. It can be paid in USD, in crypto, in any form. And that's why we have the benefit in kind. Even they can be paid by buying a car to the employee. In this case, as you described the crypto, it doesn't change the obligation of the employer to withhold the tax based on the IR-59 of the employee and based on the contract signed by the employer. So it doesn't mean that if you pay in crypto, it means that you should not declare it. Now, if you risk it and based on the contract you sign with your employee, you have another agreement with the employee for additional money, that's a problem of the employer, and it's not something that I can discuss. What I can say here, and we have a lot of past situations, if the employee reports the employer for extra money, then the employer must pay everything, tax, social insurance, and any other government funds based on what the employee declares. And in case of crypto, if he shows his crypto account receiving money from the employer, that's an evidence that is part of the salary.
Great, thanks, Saba. Another question in relation to crypto taxation, which may have already been answered in the webinar, but perhaps you can add a little more to it. What is the rate of crypto taxation and whether it is a flat rate?
I apologize, I forgot to put it in. It's 8%. Flat rate.
Great, simple answer. So now we can move on to the next one. Will there be any other changes with this tax reform? For example, it has been heard that they are still discussing the possibility of making some more changes, for example, to increase the family income from the deduction of single persons from 40,000 to 50,000. Are there going to be more changes?
I hope so. There will be more changes, and not only on the family income. There are a lot of areas that we are expecting clarifications, and we are expecting to see what will happen as this tax bill, it was a major change related to what we had before. As a concern of the individuals, the 44K, which is 22 each, and a family, so it starts with the 44K, plus the kids' allowance, plus the loan allowance or the rental allowance, it would go almost to 50,000. So maybe you misunderstood that in some other presentations, they are aiming that actually the tax benefit of a family is no, let's say that they start paying taxes over 50,000.
Thank you, Saba. One last question we have until now is in relation to the 50% discount on salaries over 55,000 euro. They are questioning whether this is annual or monthly. It is annual. Savas will be able to confirm. And what is this discount exactly, and how you can get it?
When it comes to the 50% deduction, we do have 3 different categories that you can get it, and it depends on when you really arrive in Cyprus and you become employee in Cyprus. But let's say for somebody that becomes employee in 2026, then it qualifies, and if he has signed a contract with the employer in 2026, then he for sure will receive the 50% deduction. There are some issues here, which is actually to go through, we need another one presentation. But in general terms, if you are first comer in Cyprus and it's your first tax year in Cyprus and your salary is more than 55,000, you should apply. You don't apply. You are eligible for the 50% discount.
Great. We do have one more question. So the question is, do you believe that these tax changes will benefit Cyprus and whether they will attract more foreigners?
These tax changes benefit the Cypriots and the Cypriot-owned companies. And as I described at the beginning, it's actually increased the corporation tax, which if you are a non-domicile as UBO and you have a Cyprus company, then you are instead of paying 12.5%, you pay 15%. So you have additional 2.5% to be paid to our government. At the same time, if you are employee in Cyprus, then you have all these benefits that we described before. And as one of our audience says, it's almost for a family, you have to have earnings more than 50,000 to start paying taxes, which I believe it's one of the best in Europe. Me personally, this tax bill is actually aiming to receive more money from companies that the owners, they are not Cypriots. And when we're discussing in our office about this tax bill, my employee says it was time something to happen because until now, everything we do here in Cyprus is to attract new business. On the other hand, I don't agree with such a tax bill because when you attract a new business and you attract people to live in Cyprus, even there is indirect, you receive more money than the 2.5%. Because when somebody moves to Cyprus because of the tax benefits and our good weather and the good facilities we have, and you are earning more by being this person in Cyprus, and his kids will go to schools, his family is here, they spend their monthly incomes in Cyprus. I mean, I'm not a person that I believe direct taxation is a solution for a government. And as I understand, the EU policies, it's very in favor of such tax bill as a Cyprus. Me personally, I believe it will have to change the way we're thinking in the near future.
Thank you once again. It looks like we have one more question. So what products do we have to offer abroad in terms of tax and legal?
I think Ferdinand is your question, not mine.
Yeah, I mean, it's relation to tax and legal. I'm just trying to understand exactly what this question is about.
Okay, Ferdinand, let me say something here because maybe I misunderstood. Cyprus, before this tax bill, it was the third most favored country in Europe to do business. Now we are the fifth most favored country. For most of the companies that here in Cyprus, the 2.5% will not make a huge effect. On the other hand, our government insists that they get more benefit and the cost of relocation would be more than the 2.5%. In this case, I agree. What I don't agree is how it's done. It's done drastically. It's done in the way that there is no grace period. They just started. I mean, they approved the tax bill end of the year, and it will start beginning of the year. Even us, I remember it was Christmas time, and we didn't know what is there still. So this is what I don't like about this tax bill.
Great. I think at this point we have covered most of the questions. Remember, you can reach out to us at any time privately to discuss your specific case, or if you feel that you have more questions in relation to your business, please feel free to reach out. Thank you so much again for joining us today, and we appreciate your time. We look forward to continuing the discussion.
Thank you from my side, and have a good afternoon.